You start with the small, like, okay, we have cash, we're going to put the cash into Bitcoin. No problem because we generate positive free cash flow. So we have more cash coming in to cover our operations. Not really a big gamble there. But when you saw him start to change that strategy and go, maybe we'll go borrow money and we'll buy Bitcoin, right? That's when things started getting really interesting. And you kind of pause and you go, well, wait a second, this is something we've not seen done in corporate America yet, right? Particularly on this scale.
Welcome back to the channel. Aaron here from the Bitcoin Bros, and that was Ben Workman. And in today's video, we're going to be going over a recent interview that he did. We're going to be playing a clip here, and he's going to be explaining the MicroStrategy playbook in depth. And I recommend you guys watch this one all the way to the end. I learned a lot by listening to Ben here. I recommend you guys check this one out. And before we get into the video, just want to go over a couple of things. If you guys are new to the channel, make sure to subscribe. Hit the like button. We have new Bitcoin, MicroStrategy, and crypto videos coming out every single day. But you can see right here, this is the MicroStrategy playbook. They're issuing debt to buy Bitcoin. Bitcoin increases, MicroStrategy's market cap increases. Their market cap increase, their weight in indices increase. MicroStrategy issues equity to buy Bitcoin. Bitcoin increases, MicroStrategy market cap increases, weight in indices increases. Then they issue more equity to buy Bitcoin. They repeat this cycle. From a high level, that's what MicroStrategy is doing. Stay tuned. Ben's going to be explaining in depth how this playbook works. And then you can see here, this is why so many people are excited about MicroStrategy. You can see the potential price predictions where MicroStrategy could go if you're going to be looking at that NAV multiplier there. So if you think Bitcoin is going to be going to $200,000 a cycle, you can say, well, I think MicroStrategy will have a 5x NAV. Looking at the chart, that's going to put MicroStrategy at around a $1,000 to $2,000 price for MSTR. And it's really exciting for a lot of people because if you look at this 10x NAV, Bitcoin at a $1 million price, which, I mean, a lot of people think Bitcoin will get there eventually. That's around a 15x from right now. Bitcoin at a $1 million with a 10x NAV for MicroStrategy, that's going to put MicroStrategy at around $12,000. That is just a massive move from where we're at right now, way bigger than the 14x that you would get from just holding the Bitcoin itself. So this is why so many people are very, very excited about the future of MicroStrategy. And then some bullish news. Jim Cramer refuses to acknowledge MicroStrategy. This is a little clip where he's talking about you shouldn't be buying MicroStrategy, you should be buying Bitcoin. So every time Jim Cramer says something, we always get that inverse Cramer effect, and this could be potentially bullish for MicroStrategy. But let's go ahead and jump into today's clip. Like I said earlier, I recommend you guys watch this one to the end. Ben Workman discussing the Bitcoin MicroStrategy playbook. Let's go ahead and jump into it.
The best storyline in corporate finance today because he's taken a very non-traditional approach to this, but he's using all the traditional levers that some of these companies have. He's just utilizing them in a different way. So when you look at kind of the levers that a company like MicroStrategy has to pull on as they implement this strategy, they've really got a few main ones, right? There's the ones that everyone kind of knows about at this stage. There's traditional debt, right? Just taking a loan from a traditional lending institution. But in their case, they're taking that traditional debt and converting it into Bitcoin. They're buying a hard asset with that money. The other ones that you're going to have are things like at the market offerings, ATMs, which most companies that are publicly traded, they have. It's a way for them to raise capital basically by selling their shares into the market at whatever the current prices are, right? So they sell a share, they collect whatever the dollar value is associated with that share price. And in traditional, for most stocks, you're looking at them using that capital for operating expenses, right? Something that may not be accretive to the shareholders directly. If you're just using that capital to keep the lights on, the people that are holding the shares are getting diluted every time that you do that. And that's a problem for a lot of capital intensive organizations, right? To stick with the Bitcoin mining or the Bitcoin space, the Bitcoin mining companies have this problem because there's a lot of capital expenditures that need to be made to buy the mining equipment. And so a lot of times, because they're not good candidates for traditional financial instruments, traditional debt, they have to actually go and raise most of their capital through these ATM offerings. And that dilutes the shareholders underneath, right? And if you can't generate as much value as you're diluting, they've now lost value in their shares. So MicroStrategies is a little different, right? They're essentially looking at this going, when can we use the at the market offering in an accretive manner to our shareholders? And what that looks like to someone like Michael Saylor is they'll look at what is kind of the net asset value of our company, right? Which has largely become tied directly to their Bitcoin holdings. I mean, they have about $17 billion worth of Bitcoin on their balance sheet right now, and they've got, 4.2 billion in debt. But so he's looking at how's our stock trading relative to that asset value. And if our stock is trading higher than one, using the ATM is accretive. Now he's got other tools that he can use as well. So he doesn't have to use it in non-pristine conditions to do so. But when you get to these periods where Bitcoin goes in these cycles that everyone's seen, right? The 4-year cycles where the price starts to run and then you get these lulls. Well, what we're watching right now is we're in one of those cycles where it's moving up. And that brings excitement in the market and it brings more eyes to MicroStrategy because they're really the first player to do this at large scale. And that new capital coming into the company has pushed the share price higher and higher. So now they're trading, closer to a 3 times net asset value. Well, using an ATM when your share price is 3 times the underlying net asset value on your balance sheet, now you've got a really accretive method to purchase an asset to put on your balance sheet. So he's leveraging those inefficiencies in the market and saying, I can create continued value for my shareholders by ensuring that if I use the ATM and I'm issuing more shares, they're getting more shares, more Bitcoin per share allocated to them, right? So the shareholders win. And this is a cycle that he can do over and over and over again whenever the conditions are right. So it's a new way of thinking about how to use an ATM versus the traditional, we'll use it for an acquisition, we'll use it to fund operations, whatever they may need it for at the time. MicroStrategy is basically saying operations are covered. We have positive operating cash flow, no problem there. We're going to use that capital to buy a hard asset that provides a lifetime of potential return to our shareholders. And that's what they've been doing with the ATM. So that was a new approach to using an ATM. Then he went a step further and he looked at, well, what else is out there in the markets that there's demand for? And one of those things is the convertible debt, right? And convertible debt, for people that might not be up to speed on exactly what those instruments are, is it's a bond with an option to convert into shares at certain prices, right? The conversion price. And there's certain funds or institutions out there that can only trade convertible debt. And so he was looking and going, well, where is there demand out there in the market that will bring capital into this ecosystem? And what do they want, right? Well, they want volatility. And so what Saylor's doing is he's offering them a product where he's going to sell these convertible bonds at 30, 40% out of the money, right? He's selling them at future prices. They'd get those shares at a price that's 30 or 40% beyond what it's trading at today. And then he's giving them this bond that they can now trade as a part of whatever they've told their investors they're going to do, which is trade convertible bonds. So now they're in the ecosystem. It's a new pool of capital and a new set of demand that comes there for you. And what Saylor's doing is he's taking the capital he raises from the convertible bonds and he's doing, you guessed it, going out, buying Bitcoin with it, putting it on the balance sheet. So it's another one of those ways to lever future value of their company, which is already higher than net asset value, and collect more money through a different instrument and bring that in, put more Bitcoin on the balance sheet. So he's been really using these levers very strategically throughout this process. And we got to keep in mind that we're only about 4 years into this with MicroStrategy, right? And the important part, I think, for him and what he really focused on early was scale. So we saw him being very aggressive throughout the last several years, making sure that their balance sheet is really directly tied to Bitcoin because it creates a separate product offering that they essentially have to bring to the market, which is volatility, right? Everybody loves volatility out here in the markets, whether you're an equities trader, whether you're a convertible bond arbitrage trader, like whatever your game is, you want volatility. That's how you create the returns. And so it's bringing all this institutional level capital to the table that's really made them the premier product for volatility in the market. And the more volatile it becomes, the more interested people are in trading it, right? So it's a very interesting dynamic that he's really laid out for the markets with a new product that is now eclipsed in enterprise value well beyond what they ever generated with what they actually core did as a business, which was the BI platform, which still performs well, generates all the cash flow that enables all of these things. So when we look at market cycles, right, which was one of the other questions you'd asked, there's different things to look for. With Bitcoin going in these bull and bear markets, you start to get this expansion and contraction of the net asset value, right? The multiple to net asset value. It expands and it contracts as there's more money coming to the stock, as money's coming out of the stock. And that brings different vehicles to use. You use different levers during different times. So say a company was trading below net asset value for whatever reason. That's a tough sell to go issue equity or raise convertible debt because you're doing it below essentially the net asset value of your company. That's not really accretive, and you're going to introduce large levels of dilution early in this cycle. So what a lot of times you would see people do is they would just go raise traditional debt. If their cash flow can support the traditional debt, they'll start there. And then you wait for these cycles. If you're buying an asset like Bitcoin that you know is going to be volatile and you're expecting it to increase in value over time as the dollar debases, then you've got time where you can wait for that value to come, for that multiple to your net asset value to expand. And then you've got ways to get out of that debt if you want to, right? You could go issue a convertible bond and you could take that, refinance the debt, or you could go use the ATM if you get a big squeeze in your share price and you could use that capital to get rid of it. But that's really your starting point if you're a cash flowing company. As that multiple expands out, you can start to look at really the two main other drivers, the convertible bonds and the ATM. Now, the ATM, you like to use sparingly and you like to use it more when that expansion has really happened, when you're getting in the 3+ multiple to net asset value. That becomes really ideal conditions to start using an ATM. But when you're kind of in that, 1.5 to 2.5, one of the best things you can do is you can sell the convertible bonds 40% out of the money, right? You can take your share price that's trading at 2 times NAV, and you can get the money at another 30 or 40% beyond that. So you're issuing less shares than what you'd have to do with an ATM today, but you're collecting that money today and buying the asset today that you think is going to appreciate. So when I look at it, I kind of see it as being your first stage is going to be your traditional debt if you're just starting out. Your second stage is going to be issuing the convertible debt. And then once that volatility really picks up in your stock and you're getting more of these wild fluctuations, when you start getting those squeeze conditions into your share price, then it's time to look at the ATM and really start utilizing that value as well.